Welcome to Business Prime Time. Let's cut across to the Wipro management.
Environment in the global markets is stable. We do not see any immediate impact of the macro headwinds that some of the large economies have cautioned, but we continue to remain watchful. The traction in US and Asia Pacific and other emerging markets remains healthy, and the growth this quarter growth, as you see this quarter, is across industry segments. India for us is likely to remain volatile as we undergo the transformation of the India business. We have expanded our margins significantly in the past 2 quarters, which has been driven by relentless focus and effort across our teams in sharp execution. We see some of this margin uptick being reinvested into our people as well as in the big bets that we take to continue to invest in our business and in our customers. We remain committed to driving profitable growth and high quality of revenues. Now let me share the update on the 6 strategic themes. Our digital story continues to remain very strong. The digital ecosystem improved by about 6.4% sequentially and 35% year on year, and now it is 33.2% of overall Wipro revenues. Our clients continue to increasingly draw on the Wipro digital capabilities both across design and core engineering, along with Wipro's traditional business, to deliver new products, services, and enterprise-wide transformations. Our continued investment in client mining has resulted into robust growth across all buckets, despite the impact of furloughs. In Q3, our top 10 clients grew 6.3% sequentially in constant currency terms and 14% year on year. Our top 5 clients grew 9.7% sequentially and 19.1% year on year. We've added 1 client in the $100 million bucket, 2 in the $50 million plus bucket, and 7 clients in the $20 million plus buckets. During Q3, we filed 60 new patents, taking our total patent count to 2,113. We now have 492 patents granted within our portfolio in new age technologies like data analytics, cyber security, artificial intelligence, and so on. And we continue to drive non-linear growth within our portfolio. On automation, we've deployed Wipro Homes now in over 350 customers. And as we continue to measure the work done by bots, this quarter, it has improved from about 3% in quarter 2 to 6.7% in quarter 3. And our fixed price project mix has gone up to 59.8%. We continue to focus on localization in all the key markets, and the US localization has crossed 62.6% this quarter, up from 60.3% in Q2. Our early investments about 2.5 years ago in localization, building relationships with universities, cadre building in various markets has helped us cater to the demand and fulfill the demand that we see from our customers. In Q3, we completed a new investment in MOOCsoft and a follow-on financing of Demisto. MOOCsoft provides a platform to automate IT operations using artificial intelligence. And Demisto, as you know, offers an automated incident response platform that combines security orchestration, incident management, and interactive investigation. Both the companies are leaders in their respective fields. The total number of investments now, including fund investments from Wipro Ventures, stand at 18. We've incubated 3 new themes in our Horizon program during the quarter across our priority areas. Overall, I think a very satisfactory quarter, and now I will invite Jatin to give you the highlights of our financials.
Good evening, and very happy to speak to you. Excellent set of numbers we had for you for quarter 3. You all have my deck, so I just will like to very quickly share with you 4 or 5 highlights for you. Our revenue was at the upper end of our guidance at 2.4%, margin 19.8%. We grew year on year our EPS 38%. Our net profit grew closer to 30%. We had excellent DSO and unbilled performance, quality of revenue for quarter three, and therefore our operating cash flow were 142% of our net income. If you see our performance across sectors, 3 of our SBUs grew upwards of 10% year on year, showing that the growth is secular growth. 2 of our largest geographies, which is US and Europe, grew excellently at 3.7 and 2.7% for the quarter sequentially. 2 of our largest service lines, which is DO&P and modern application services, both had excellent sequential growth. We added 1 more customer in greater than 100 million category. Finally, I am happy to share that the board of directors have recommended, subject to shareholder approval, 1 bonus share for every 3 equity shares held. We also declared 1 rupee per share as dividend, interim dividend for this fiscal. As we get into quarter 4, our guidance is 0 to 2% at the constant currency which is mentioned in our press release and in this presentation. We'll be very happy to take your questions now.
Hi everyone. On your right. Hi, Abid. Mixed set of numbers. While the revenue has come in line, it's a beat on margins and PAT. But the guidance for Q4, all IT companies have been optimistic, and Q4 is supposed to be a seasonally strong quarter, so to say. Is there a client-specific issue? What really are the drag areas? Because analysts, at best, at conservative estimates, were penciling in at least 1 to 3%, really. So the way forward on that, and then I'll come to Jatin.
I think it has been a good quarter and good in-quarter execution. When we give guidance in the beginning of the quarter, we guide per what we see and incorporate the risks that we see in the environment. I think overall, the demand environment, as I said, is quite stable. We are winning our share of business. This quarter also, we've won a significant amount of what we call as large deals. We have had a good order book. So I don't see any major issue with the demand environment. There are 2 risks that we are monitoring carefully. One is the macroeconomic voices that we hear, and it impacts some of our customers as they have announced their results. And right now, we have not seen any slowdown, but we need to be careful in how that turns out. Both, as you might be seeing in the US banking sector, in UK in general with what is happening with Brexit, etc. And the second area is the demand fulfillment from a simple, demand-supply gap that exists in the talent, and our ability to fulfill and then convert it into revenue. So both of that has been also incorporated in the guidance that we've given. I don't see any
client-specific or company-specific issue. No. All right. Jatin, on margins, what are the factors that led to a strong operational performance, apart from operational efficiencies, the rupee decline, how much of that was really a factor, and the trajectory going ahead?
Yeah. So we had very good execution on our operating levers. If you see, our offshore mix has improved by about 60 basis points. If you see, our fixed price percentage of execution has gone up by about 1%. And that has been executed very well during the quarter. If you see, we have invested in automation, which we have constantly talked about. That has given benefits in quarter 3. So roughly half of the gains have come from operation. Other half of the gains have come from superior forex realization that we had in quarter 3 versus quarter 2.
All right. One time affair. Okay, thank you.
Here's Mugdha from CNBC. Hi, sir. Again, firstly, congrats on the strong Q3. Again, question on margins. If you could just give us a little breakup, apart from the forex, if there was also any impact from the restructuring and so on. Can you just give us a breakup of the forex? And again, the question on guidance as well. It seems to be a little cautious. Going ahead, if you could just elaborate a little bit on that as well.
So the impact. So let me summarize how our margins have performed. So as you know, our margins for quarter 3 is 19.8%. And you know that we have done a new segment from quarter 3. If I go back and restate quarter 2 in the same fashion, our comparable number would be 18.6%. So we have an expansion of roughly 1.2%. Of that, half has been to the credit of significant operational improvement, and half is because of the superior forex realizations.
Again, my answer on guidance is the same. I think, we have talked about 2 or 3 areas in which we are still working on. Primary one being our health vertical, especially in the HPS area. The Q3 for HPS is open enrollment season, and we've seen a 10% decline in open enrollment compared to last year. That kind of will then turn out, that business is on a price per member basis. It's a outcome-based pricing. So when the number of members are lower, again, we have an impact on revenue. And we still have to see, based on last year's experience, 1 or 2 insurance companies, our customers, may decide not to participate in the market going forward. So that uncertainty is built into our guidance. Otherwise, as I have said in last couple of quarters, we are working on our manufacturing business and India business, and that has been incorporated as well.
Could you give a little more clarity on the restructuring, where it stands right now?
So we are, as we had announced last time, we complete the restructuring of our India business. We've looked at the rhythm of the India business. We have a very robust India business. So the private run enterprises of the India business continue to be pretty much like the global business's rhythm, both in how we execute, what we execute, how we deliver, the digital component and all of that. And the state run enterprises, we have taken into a different segment. And because the rhythm of that business is quite different in terms of the contractual conditions, the time it takes to execute some of those engagements, the profitability, and the associated liabilities and so on and so forth. So that is how we had restructured the business. The restructuring is complete. We have 2 new leaders for both those businesses. They have taken charge. They have. We had a very good India team. That was for the combined BU. The people responsible for both part of the business have been split into 2. And now we are, based on the opportunities in both sides of the business and some of the work that is required in the state-run enterprise side of the business in terms of transforming and turning it around, is already underway.
Hello, Abid, Nishan this side from Bloomberg Quint. On the healthcare bit, last quarter you said that you're going to see the performance of the healthcare segment, and based on that you'll take the call. Given that you already said that there's a 10% decline in the healthcare, in the uptake of enrollment, what is the way forward for the healthcare, and especially focusing on the HPS, and also any more divestment plans in place as well?
So again, the 10% reduction will result into an immediate revenue impact to that extent. And we continue to work on the HPS platform to extend it, as we had said, to other adjacent offerings. I think the need for healthcare in the US continues to be there. We have very deep domain expertise. We feel very good about that business, the team that is there in that business, the platform that we have. Once there is regulatory certainty and insurance companies start participating in that, whatever is the new regulation, we will be able to upgrade our platform to meet the requirements of the new regulation, and that business will be back on track. By when, I cannot say, because we do not know when the regulatory clarity will arrive. Of course, you must have seen the November election results in the US. So there is a chance that as part of some of the bipartisan compromises that may likely happen now, there could be a way forward. But, I would hesitate to put a guess on the time frame for our health business.
And on any restructuring plan or divestment plans in place, which has also factored in the muted margins that you have given?
We have not guided. I think your reference was with the revenue guidance. No, to the extent that we have done our restructuring, we have been in public, we have made our comments. There is nothing more than what we see on the horizon that has been factored in the guidance, as Abid mentioned.
This is Devasis from Business Standard. Yes, sir. On the left side, yeah. So I have a couple of questions. I just want to understand, firstly, that has the deal win from Alight, any revenue flow has actually kicked in the current quarter, firstly. Secondly, want to understand that when you were indicating that demand fulfillment could be a challenge in the quarter 4, are you actually indicating towards higher subcontracting cost in US and other geographies? And what is your outlook and how do you actually plan to execute projects with human resources available? Thirdly, I want to understand that on the Europe side, at least in the UK side, what is the kind of exposure you have in the UK? And if you can give specific comments on the UK business in Q4, that will be great. Thanks a lot.
So I will let Saurabh answer the talent question. And what was the first question?
Alight.
So Alight, as you know, we closed the deal effective September 1. So in last quarter, we had 1 month of revenue from the Alight deal. In this quarter, we have all 3 months of revenue, which means incremental 2 months of revenue from the Alight deal. It's part of what you see. I think our Europe business is very robust, overall Europe, including the UK. We just incorporate the uncertainties because we think it's going to be a lot of work that happens depending on how Brexit pans out, because a lot of companies in their IT systems invariably, as their processes change, as regulations change, will need work to be done. And that is an opportunity. But again, we don't know whether it will be a hard Brexit, a soft Brexit, a second referendum, a no Brexit. So once there is clarity, some customers have started doing some work around that to plan, and we participate in that based on our footprint at the customer.
Hello. Hi.
1 second, I have to just answer the second part of the question. See, on the talent front, we are seeing a lot of demand near the customer, new areas, digital areas. As you heard, we have been the first ones to look at localization, and over the last 3 years, we had a significant move. We continue to hire locally in most of our markets, in every country, but actually STEM talent in some of the countries is scarce, and hence, and the demand to manage that. So we are trying to see in-country hiring, moving from elsewhere, and how do we manage the entire supply chain. I think that's the thing. So there's a robust demand, and there's plan around it to look as we're going forward.
Yeah. Hello.
All right, that's the take. You heard it from the management of Wipro, giving us more details on the quarter gone by. By and large, it's been fairly steady, and it's been a bit of a mixed quarter, if you will, for Wipro. And inline revenues, a beat on the margins, as well as the PAT, the Q4 guidance as well, has been a little bit below what the street was expecting.